Hello guys, welcome back to the channel. If you are new to the channel, hit the subscribe button and the bell icon to receive notifications whenever a new video is shared. And you can see there are a lot of study materials for your full preparation for the upcoming CBSE and the ISC examination. In this video, we're going to solve question number 25b, which is the OR question under question 25 based on the issue of shares journals. So without further ado, let's get started. Here we have question number B under 25. Mukund Limited. It invited applications for issuing 50,000 equity shares of rupees 10 each at a 10% premium. The amount per share was payable as follows: 3 on application, 3 including premium on allotment, and the balance on first and final call. So how much is the balance? Let's do it. 10% premium means 1 rupee premium. So total 11 rupees is the value of the share. 3 and 3, 6 is already here. So 5 rupees is on first and final call. So let's write it down here. 5 rupee just for understanding. 5 rupee. Applications were received for 1,20,000 shares, and shares were allotted on pro rata basis to all the applicants. Again, the important word to be noted here is all. Okay, there is no rejection. So based on this, let's pass the first journal, bank account debit to equity share application account, 1,20,000 shares into 3, which is 3,60,000. So the first journal is done. Now the second journal, equity share application account debit to equity share capital account to equity share allotment account to bank account. Equity share application will be 3,60,000, the same amount that was created in the first journal will be debited here. Equity share capital account, that will be on 50,000 shares at the rate rupees 3, so 1,50,000. And to equity share allotment account, again on 50,000 shares at the rate rupees 3 including premium, so that is also 1,50,000. Okay, however, the company still is left with 60,000, and that will be refunded. See, if you read the question here, the excess money received on application was adjusted towards sums due on allotment only. So nothing to be adjusted with call. Any excess money beyond allotment will be refunded. So this is the refund, which is like a hidden refund. You have to understand and make the entry accordingly. To bank account 60,000. So for allotment, we have received the entire allotment, including premium, nothing is left. Let's move on. Application money in excess to sums due on allotment was refunded. It's clearly mentioned as well. So no need to worry. In case it is not mentioned, then also the same entry would have been passed. A shareholder who had applied for 6,000 shares could not pay the call money and his shares were forfeited. So let's move on with our journal. The next journal is making the allotment money due. Equity share allotment account debit to equity share capital account to securities premium reserve account. Now we know 1 rupee premium is there. So 1 into 50,000 shares, 50,000. Equity share capital account will be 1 lakh. After doing this entry, second entry for allotment will be bank account debit to equity share allotment account. However, we are not going to receive any money on this because entire money is already received here, up here, 1,50,000. Okay, so this you can write. It's better you write it, show the amount as nil, but however, for this entry, there is no marks allotted. I'll show you the marks distribution in a bit. Let's move on to the next journal, equity share first and final call account debit to equity share capital account at the rate rupees 5 as we calculated here, 5 into 50,000 shares, which is 2,50,000 rupees. And then while receiving the money, there is a calls in arrear. So generally we follow the second journal which is shown, otherwise it's up to you which one you're comfortable with. However, I find the second one more comfortable along with most of the students. It's easy to understand how much is the calls in arrear and also helps you to do the forfeiture entry easily. Bank account debit, calls in arrears account debit to equity share first and final call. Now, there is a defaulter here. First, read the question carefully to understand the shareholder who applied for 6,000 shares could not pay the call money and his shares were forfeited. So he had applied for 6,000 shares and there is a pro rata allotment that has been done. In that case, now you have to find out the ratio. 50,000 shares company is issuing and company received application for 1,20,000 shares and all of them were allotted shares. So the ratio becomes 1,20,000 is to 50,000. That means 12 is to 5. Using this ratio, we will calculate how many shares were allotted to him. So 6,000 into 5 by 12, which comes to around 2,500. This is important. This is the trick which is hidden here. Always, whenever there is a pro rata allotment, you have to look for these information, number of shares applied versus number of shares allotted. So he is a defaulter on 2,500 shares, not 6,000 shares, because he is holding 2,500 shares. There should be no confusion here. 2,500 shares into 5 rupees is 12,500. That goes as calls in arrears. Bank account debit is 2,50,000 minus 12,500, which is 2,37,500. So this is the entry for receiving the call money. Now there is a forfeiture, equity share capital account debit to equity share first and final call to forfeited shares account. Always remember, the premium money that has been received by the company cannot be debited. So that's why it's important to remember that information. So in this case, 2,500 shares are being forfeited at the rate rupees 10. So that's why equity share capital account debited 25,000. Equity share first and final call 12,500. Or again, this is the second entry we are following here. So equity share capital account debit, two calls in arrears, two forfeited shares. Calls in arrear for the first and final call is 12,500 that we calculated here. Two forfeited shares account 12,500. This is the amount that has been received by the company and forfeited, which is the remaining 12,500. Now, if you're doing the first journal, that's also easy. Just you have to remember the calls in arrear money is directly subtracted here in the bank account entry, and the money that is deducted as calls in arrear is credited here against to equity share first and final call. That's it. If you are able to remember that, you can do that. Go ahead, not a problem. So there is no reissue information given in the question. This is the list of journal which is required in this case. Let's have a look at the marking scheme or the marks distribution. How much marks is allotted? So for the first entry, there is 1 mark. For the second one as well, there is 1 mark. Third one as well, there is 1 mark. For this entry, I told you this is good to write. However, there is no marks allotted for that. For the next one, also 1 mark each, and the last one as well. So for every entry, there is 1 mark allotted. It's good that you do that correctly so that you can secure these marks for yourself. If you have any questions, do let me know in the comments box below. I'll help you out. If you find something new that you have learned here, do let me know in the comments box below as well. Do share with your friends and stay tuned to this channel for more such videos coming in. Thanks for watching.